Good morning. I'm Ella McSherry, Chief Operating Officer at the New Jersey Society of CPAs. Welcome to IssuesWatch with Ralph Thomas. Ralph, who is seated to my immediate right, is the CEO and Executive Director of the njcpa. Ralph's guest for today's show is Brad Muniz, who is seated to my far right. Brad is partner in charge of accounting and auditing at Sobel & Company, LLC, and is the current president of the NJSCPA. If at any point during our broadcast you have questions, we invite you to submit them via the Questions tab so that we may address them throughout the broadcast. Today's edition of IssueWatch will cover three different areas. First, we'll start with the 215 tax filing season. We'll then move to what's going on in the area of tax legislation, both on the federal and state level, and then we'll move into hot topics. So let's get started. The IRS Commissioner, John Koskinen, has stated that the 2015 tax filing season will be one of the most complicated seasons that we've had to date. Some of the primary drivers and reasons for this are, first of all, the Patient Protection and Affordability Care Act of 2010, which will figure prominently on the many individual returns that you yourself will be filing on behalf of your clients or for your own personal return. Now, the late action by Congress on legislation to extend the temporary tax provisions, most of which all expired in 2013. And as we all know and remember, those that were extended quite late for the 2014 tax season were challenging at best. We have to believe the same will happen for this particular filing season. Earlier this month, both the House and the Senate voted retroactively to restore 50 of the 55 tax provisions that expired at the end of 2013. This will give taxpayers immediate relief for 2014, but once again leaves us for an unknown status for 2015. Some of the extenders include itemized deduction for state and local sales tax, above-the-line deduction for qualified tuition, tax-free IRA contributions to charity after age 70 and a half, credit for residential energy efficiency improvements, work opportunity tax credit, and research credit. On your screen, you should be seeing a link for a complete listing of the tax provisions that were extended, and we will also send you this link in a post email that you'll receive at the conclusion of the broadcast. A third driver is the tax return identity theft that we've been dealing with for the past few years. We have a short video clip that we'd like to show you regarding tips for yourself and your clients to protect yourself from identity theft. Margaret Van Brunt, who is one of your peers, was able to speak with us a couple of months ago on identity theft. Here's Margaret.
We're all aware that identity theft is one of the greatest challenges facing individuals in the United States today. The Internal Revenue Service also is facing a great challenge with tax return identity theft. During the 2013 filing season, the IRS estimates that over $5.2 billion in refunds were fraudulently issued. In addition, they estimate that $24.2 billion was detected, therefore preventing tax return identity theft. So what can you and your clients do to protect yourself? One, be sure not to provide personal information over the telephone, mail, or internet. Check your credit report every 12 months. Do not release personal information and secure personal information in your home. Should you believe that you are a victim of identity theft, you should contact the IRS Identity Theft Protection Specialized Unit immediately. Their contact information is available at irs.gov.
The IRS has also issued its annual Dirty Dozen tax scams for 2014. The IRS is warning taxpayers to be on the lookout for tax scams using the IRS name. It is urging filers to protect themselves and to use caution when viewing emails, receiving telephone calls, or getting advice on tax issues. Please keep in mind, as Margaret said, the IRS does not call or email you. They will only use postal mail. So Brad, I know you're an auditor, so tax is not your forte, so to speak, But what is your firm doing to ease the challenges of the 2015 tax filing season?
We're trying to address issues as early as possible, but particularly as it relates to the identity theft, and our concern in that area is we have to, and all firms have to be cognizant of the sensitive data that's included on the tax returns, which includes the name, address, and the ever coveted Social Security number. A lot of firms, including our own, are looking into the portals. We're not printing as many tax returns as we had in the past, although I still see a lot of paper floating around our office. And we're providing electronic returns, but clients are often calling up asking for copies sent to them, electronically transmitted to them. So we're looking into the portal concept where you put it up there into a safe area and they can go pull it down at their leisure. And if firms don't have that ability to go that route, then I recommend that if they insist on using emails, to mask at least the Social Security number. A lot of the software out there, Pro Systems, I know does, I believe Lacert does it, mask that Social Security number, because the last thing you want to do is have that information leaked out to the public. So protect that data. I've had a client that has received 2 phone calls from the IRS. The person on the other end could barely even say the letters IRS. So it's really, you could see right through some of these. We're trying to educate the client as to don't respond to information on the phone unless you talk to us first, to help you out. So it's a lot of education and just safeguards we're putting in place.
Good advice. We're now going to move to tax legislation that we are watching here at the Society. Let's first talk about what's going on at the federal level. Ralph, let's talk about Corporate Inversions Act of 2014 and its potential impact on New Jersey and U.S. businesses.
Thank you, Alan. Certainly, this has been a hot topic that hit the landscape this year. In Washington, there was a bill introduced or proposed, the Corporate Inversion Act of 2014, and essentially what this bill does, it tries to reduce the tax loophole that allows U.S. companies who merge with foreign companies to reincorporate offshore in lower tax jurisdictions, therefore avoiding being subject to U.S. tax on overseas earnings. This is something that the Obama administration has been really focused on and has expressed a lot of concern about U.S. companies trying to avoid the tax scenarios or the higher taxes here by reincorporating. One of the more recent things that brought this to light was the merger of Burger King with Tom Horton, I believe, the Canadian in Canada. So, and this is starting to cascade down to the state level as well. In New Jersey, we've had several bills that have been introduced regarding tax inversion, companies that are involved in tax aversions. The bills have been introduced in both houses, both the Assembly and the Senate. And what they've done is it bans awarding of state contracts to U.S. companies which have reincorporated abroad to avoid U.S. tax obligations. In particular, a bill that was introduced on the Senate side will also bar companies from economic grants and other financial aid and assistance, and those are really important issues for companies who want to relocate to a jurisdiction if they can get economic development aid. And then they've also gone as far as to ban reimbursement of taxpayer subsidized programs, such as Medicaid. So you can understand some of the implications by putting these types of bills. It will, if they are done on the local level, it will discourage businesses from perhaps relocating here or even expanding their operations here if they happen to have a foreign operation where they've reincorporated. So needless to say, we're concerned about this and the impact that it's going to have on the profession and businesses and the business climate overall here in New Jersey and also in the U.S. as well. So it's a concern. We're watching it. We're monitoring it. We will probably be addressing and reaching out to members of the legislature to share our concerns on these particular issues that they're doing relative to tax evasion. So keep abreast. It's going to be interesting. As a matter of fact, one other matter, there was a large pharma deal that back in October, which was ready to go, and as a result of the concerns surrounding the Corporate Inversion Act, even though the act had not been inputted, the deal was terminated. It was a huge deal between two mega pharma companies, and so this is really speaks to the concern out in the marketplace about this particular legislation and some of the impacts that it has with businesses and things that are taking place. So I like to say, stay tuned to see what else happens in this area.
All right. Thanks, Ralph. Brad, regarding the Affordable Care Act, what issues have been settled to date, and what, more importantly, what can our members be telling their clients?
Well, there's been so much around this whole topic for the past, since 2010 that, it's never left a good taste in people's mouth. But so I want to try and start off with a positive, if somebody could consider a positive. There are a lot of students coming back from college, and some of them don't have employment. So the one thing to remember that the act did put into place is that people could stay on the parents' health care plan till age 26 if they don't have health insurance provided to them. So it's a positive to some people. I'm sure the parents would rather have the child have a job than be on their health insurance. Yay, health insurance. But more importantly, it's the employers have to really focus on this and not keep saying, delay it. Let's just start focusing and start planning a little bit more is what we're trying to tell the clients. No knee-jerk reactions, but let's really make sure we review and evaluate your full-time employee roster. And it may mean that some people are bringing it under the required thresholds. Do you actually need all the full-time people you have? Review the plans that you have in place, or your existing your plan you have in place, because the Cadillac tax is supposed to be kicking in 2018, and I know that's a few years away, but it will come up quickly. Remember, it's for individuals with benefits of greater than $10,200 and family plans $27,500. So just start planning ahead. Don't wait until the last year till you're rustling around. So constantly evaluate your staffing and evaluate your plans that you have in place, and your cost structures. Definitely
is critical for the small employer to really look at this seriously.
Yeah, very much so. And I mean, the 50 employee threshold was put out there. That's not a big company that we're talking about.
No.
That is a medium-sized company, that's smaller than medium-sized company, that these are going to hit, and that hit could be significant.
Right.
So.
How about, Ralph, in the area of, I'm going to give this one to Brad because it's an accounting question.
Oh, wow. Okay. Brad's our accounting expert, so.
What about in the area of cash basis of accounting? What are we seeing there, Brad?
Well, the IRS was trying to put forth a cash basis legislation where larger organizations, and it would particularly affect accounting firms, law firms, professional organizations that are on a cash basis, eliminating that and putting them in effect on an accrual basis. There was significant pushback by a lot of organizations, a lot of grassroots efforts by the state societies, by the AICPA, and we had 233 opposing it. Obviously, we had 233 House of Representatives and 46 senators that signed on to the letter opposing the legislation. The problem for us is only 3 people from New Jersey, 3 representatives from New Jersey signed on, and I think we need to show a little bit more support for the rest of the nation from New Jersey. We have a lot of service organizations here that probably are using cash basis. So
possibly just getting out and talking with your senator or your assemblyman and letting them know.
Exactly,
Absolutely.
Especially if you're a key person, a key point person. In other words, if you know a legislator, if you have a contact with a legislator and you feel comfortable talking to them, they should be reaching out to the New Jersey Society, particularly Jeff Kazerman, to let him know that, so he can talk with you and help you make the contacts and give you some talking points.
Give you the materials that they
right.
And this is a point that affects not just firms, but businesses in general. If you are in any type of pass-through type entity, partnership subcut. So if you're a law firm or architectural firm, so this is important. I know New Jersey needs to do probably a better job in terms of getting its members of its delegation, but to have 233 members of the House agree on something in today's environment is, I think, outstanding, and also having bipartisan support, given the kinds of things that are going on in D.C. these days. So again, I think to your point, Brad, getting our members to reach out to their congressmen and and to our our senators here, to ask them to support this, because this could have significant implications in terms of the structure and from a profitability standpoint with companies.
Right. Good. Well, Ralph, we've been dealing with the tax preparer registration for a couple of years now. What do we need to be aware of going into this tax filing season?
Well, I guess just a couple of things. I think the last time we talked about the fact that the AICPA had sued the IRS regarding this situation, and since our last discussion on this, there was a court ruling which AICPA was considered not to have standing in this, and so their suit was dismissed. Now, subsequent to that, the AICPA has filed an appeal because we're very concerned, and when I say we, the profession, that the IRS's actions in this area really have significant implications on the public, and in terms of the characterization of unlicensed tax preparers and their standing, if you will, or recognition with being afforded a designation such as registered tax preparer or certified tax preparer. These are the things that are really, really very, very concerning to us. However, we still have the P10, which everybody who is preparing taxes for compensation should be have a P10 number. So that can be acquired by going on the IRS website and registering. But interesting on this whole matter of the P10, we've been, I guess this has been in place for now about, I think, 3 years, maybe even 4 years. So a group of CPAs in Texas has filed a lawsuit against the IRS regarding the P10 fees. They found a little niche in the rules and regulations that says that the IRS can't charge more than what it costs to implement a process. So the belief is that in implementing the cost to implement the P10 process is somewhere around, I guess, $20, give or take a few. And the IRS is charging, I believe, it's $64.25, if I'm not mistaken. So if they are successful in this suit, then the IRS would have to refund that differential, not just for this year, but for every year that the P10 process has been in place. So we could have a windfall here for firms that have had to register a number of people and a little bonus, so to speak. But I wouldn't hold your breath. It's going to be an interesting case that.
I would think the administrative costs alone to refund the money would eat up the differential,
probably,
right?
Yeah, that would probably be the differential. Something like these big lawsuits where all the money goes to the attorneys and to the legal process. But it is an interesting issue that's on the table. And I tell you, the profession is really concerned about this whole area of registration. And to make matters even a little more complicated, this has started to cascade down to the state level. Here in New Jersey, as a matter of fact, we have it's not a bill, but it is a joint resolution that's been introduced to create a task force. And the purpose of this task force would be to make recommendations, first to study, and then make recommendations concerning regulation of tax preparers. And so they'd be looking at such things as scope of the program, the educational qualifications, continuing education requirements, and preparer qualifications. So this could be enormous. It's going to be a 7-member task force. 4 of the members are going to be appointed by the legislature, 2 by the assembly leadership, both minority and majority, and 2 by the Senate leadership. 1 seat is designated, probably you could say, for the New Jersey Society of CPAs, because it is dictated that a state CPA society would have representation, and there'll be an enrolled agent slot and then there'll be a representative for the Division of Consumer Affairs. So this could be interesting. I think at first blush, the profession, in our opinion on this, is that we probably don't need regulation on a state basis. I think we want to see what flushes out on the national level, and the notion of creating a separate, another set of regulatory structure relative to the tax preparers is just overbearing. However, some states have gone down that route. I believe Illinois has implemented something, so this is something that we'll definitely be watching in the future to see what happens, but we're definitely going to, if a task force is set up, we'll definitely be involved and air our concerns about setting up a structure such as this. I have to believe, too, that I'm not sure what the benefit would be behind this, so that's what's always concerning in that matter.
Well, more to come. So we started to talk a little bit about the state level. Let's move to the state level. The CPA Society has been working with other New Jersey businesses or business-minded groups to create what they're calling One Voice for New Jersey, which includes the CPA profession, the clients the CPA profession serves, and the business the CPAs work in. The purpose of the coalition, as I understand it, is to make New Jersey a more attractive state for business. I know you've been involved, Ralph. Can you give us a little bit more insight into what the group is looking to do?
Sure. Well, we've always been involved from an advocacy standpoint, but I want to say we've been involved sort of in the shadows. And so I think with some of the critical issues that are facing the state in terms of improving its business environment, the profession can play a major role in this. And so what we've been doing is getting more involved with the various business groups out there and really articulating that the business groups ought to come together and, as we say, have one voice. Many times you'll find that each of the business organizations will propose a particular bill with their spin on it, and then another group will have a similar bill trying to accomplish the same thing but going down a different pathway, and then you'll have 2 or 3 other groups coming in and doing likewise, creating bills that do that. For example, and we'll talk about this probably a little bit later, but the estate and inheritance tax. There are over a dozen bills in the legislature trying to address this issue. So the goal is really to create, as you say, a more attractive business environment here in New Jersey, but getting the business alliance groups to work together and speak with one voice and agree on model legislation on particular policies issues, which we have the best opportunity of getting through. So stay tuned for that. We feel we can play, and when I say we, the profession can play a critical role because our members really touch the business community in all aspects. We have individual CPAs that are in business and industry. We have CPAs that are in firms, that work for government, nonprofits. So we want to bring together that collective knowledge and insight that they have and what's happening in the business environment and bring that to the forefront and provide that information to lawmakers so they can really make informed decisions and not make decisions based on emotion or based on the fact that an election is coming up, but really try to do what's right for the state of New Jersey.
So you were talking about how we certainly have always been involved in advocacy and will continue to be. So what do our members need to know about the items that we're paying particular attention to?
Well, certainly the conversation in Trenton today is centering around two big items, if I think, and that's the New Jersey Transportation Trust Fund. It's no secret that if something isn't done sooner than later, that in June 2015, the fund will go bankrupt. It'll be out of money. And this fund is set up to take care of the infrastructure needs of the state, the roads and bridges that are in New Jersey that New Jerseyans travel each and every day, and others travel each and other day to get to their places of employment, to deliver goods and services. So it's important that we have, if we're going to move New Jersey forward in terms of improving the business climate, we certainly have to have an infrastructure that supports that. So the big issue is, should there be an increase in the gas tax? New Jersey has one of the lowest gas taxes in the country, but the notion of raising taxes has always been something that lawmakers and even citizens have been opposed to. But again, we really have to step back and take a look and say, is this something that we really should do because of the importance of having a strong infrastructure and distribution and transportation system? As in a meeting that we were at with the Senate President the other day, he says, I know about building bridges. And he says, all you have to do is look at my hands. And he says, it's discouraging to go and look at a beam that's supporting a bridge and you can see through that beam. So New Jersey has a number of bridges and roads that are in disrepair, and so not to have a strong, a solvent transportation fund, just going to really make it much more difficult.
But what I found interesting that day when we were at the presentation, both sides seem to be in agreement, or fair agreement, that the trust fund does have to be funded in some way.
Right.
The holdup is, they want accommodations. Each side wants
that's
accommodations
how you
a
get
different
there.
way. Right. So everybody agrees on the middle. It's the fringes that they can't agree on that's holding it up.
I think the issue is always, can we do things more efficiently and effectively here in the state? And so I think that's part of the equation. And yes, we'll increase the, make the trust fund solvent. But are there ways to cut costs in terms of how we do things? I think I heard a story that for every contract, they, suppliers have to create a new computer system or whatever, and that's one of the things that perhaps maybe we can standardize some things there.
I know we're talking about legislation, but we also want to talk, spend a little bit of time on the research that we had the opportunity to do. For the second year in a row, we partnered with the Pennsylvania Institute of Certified Public Accountants and worked with Franklin and Marshall College to survey high-level CPAs working in all sectors, both in New Jersey and Pennsylvania. And this survey was conducted between September and November 2014. And we're very fortunate Ralph's been intimate with his findings, and he's going to take us through them right now.
Sure. The survey was very revealing. I mean, when you think of surveys, 87% of New Jersey CPA respondents, and these were CPAs in high-level positions across all disciplines, just believe that the tax structure here in New Jersey is worse than most states. I mean, that came through loud and clear in all of the results. Also, high taxes. I mean, this is no secret here that the residents and citizens of New Jersey believe that taxes are higher, and our members say they believe that it's a hindrance in terms of the future economic growth in New Jersey. And certainly also 33% believe that they contribute to the state's high unemployment rate, where our unemployment rate is still higher than the national average. So I think what we did this year was we sent the survey out, the results of the survey out to the members, all members in the legislature. And I think they've picked up on it. We've noticed a couple of leaders who have actually quoted some of our statistics in their discussion about what needs to be done in New Jersey. So that's, again, that's part of our goal to elevate our advocacy profile here in the state. And more importantly, to put out good information. I think that legislators can use in terms of their decision making.
And so they have a pulse as to what is going on, what the constituents are really thinking, feeling.
Oh, absolutely. And who better to know about that than CPAs? Again, we touch so many people, so many businesses and industries here. It's just something that I hope legislators will continue to pay attention to. Also, our peers out there in the other business alliance groups have picked up on this information as well and seeing it. So one of the other big issues or recommendations that came through was in terms of trying to expand the economy and grow jobs here is to reduce property taxes. I mean, that, again, that's no secret. And when you hear about it, that's what people talk. Also, reducing corporate business taxes. And the one other thing that we're working on, in addition to looking at the transportation fund, is the estate and inheritance tax. We truly need reform of that here in New Jersey. We're one of two states that have what's referred to as death taxes, and ours are the worst in the country. There's no debate about that, and so that's something that needs to be addressed here in the state. So it's coming through loud and clear that that's what needs to be done. again, back to some of the outcomes of the survey, 83% of New Jersey CPA respondents feel that taxes have prompted clients to leave the state. There was a study done, and I believe it was by a group out of Boston about 5 or 6 years ago that said in this 5-year time span, over $70 billion, I think $75 billion of net worth exited the state. People just leaving the state.
I saw an interesting statistic yesterday. I mean, a lot of people on here, business industry and tax, and they know that the threshold in New Jersey is $675,000, and according to the New Jersey Department of Treasury website, the average sale price for a house in 2014 in New Jersey was $391,989. That's greater than 50% of the estate threshold. So just your house can comprise that. They want everybody to be putting away towards retirement themselves. Add that to the value of life insurance. And in New Jersey, it's just, this is not, this side versus that side. This is right in the middle of New Jersey.
Yeah, and one of the troubling factors, but something that our members have to do who advise clients, they're advising them to leave the state of New Jersey, to relocate somewhere else because of the impact of New Jersey's estate and inheritance tax. So, big issues.
We're a fairly small state, so you can easily jump to Pennsylvania and New York and still get around New Jersey and see the grandkids or the rest of the family very easily.
And how easy is it to spend 186 days somewhere else and establish residency there and just come back and forth to New Jersey and have a second place here? And even with the technology that we have in today's environment, you can run a business. You don't need bricks and mortar to do that. You can run a business from out of state. So again, going back to some of the things, just to give you a quick, I said 71% of our members who have advised clients to relocate. 84% think the impact. The state's middle class is impacted just as much as the upper echelon, because there's all the discussion that if we do something on these taxes, it only going to affect a small amount. But back to your point, even the average Joe here in New Jersey, if they've been in a house for 30 years, have no mortgage, and it sells for that, they're halfway there through the exemption right now. So. Well, what else can we we have, I guess, an upcoming video from our state treasurer that speaks to some of the concerns surrounding the tax area.
Mr. Treasurer, are you concerned about recent reports of the migration of the New Jersey tax base? I've read numbers somewhere at $70 billion over the last decade. Are you concerned about that? And how can we combat that? How can we keep the tax base in New Jersey?
Yes, I'm very concerned about it. I think every New Jerseyan should be concerned with making sure that New Jersey remains competitive as a place to invest, do business, raise a family, go to school, you name it. The fact is that notwithstanding this administration's efforts, we still have a highly uncompetitive tax structure here in New Jersey. We're known broadly as a very high tax jurisdiction. Our property taxes are through the roof. But our business taxes and our individual taxes are also at the very high end of the spectrum, both regionally and nationally, if not internationally. So, I know there are many determinants into location decisions and investment decisions, but clearly taxation is a factor, a major factor. And if New Jersey continues to be an outlier in respect of, say, its gross income tax, or the fact that we have a transfer inheritance tax and an estate tax with a very low threshold, that's a problem for us in dealing with competition from Pennsylvania, New York, Connecticut, Maryland, and other states in the region. So we have to keep an eye on that. It has to be our priority.
What do you say to financial professionals, tax folks at the society and beyond, who tell their clients, from an estate planning standpoint, don't die in New Jersey, simply put, because of the estate tax situation?
Well, At one level, I could say, please don't tell your clients that because it's not helping the state of New Jersey. But I can't blame these professionals for giving their clients their best advice under the circumstances. And the fact is that at $675,000, our exemption level is completely and totally uncompetitive with our neighbors and out of sync with the trend nationwide. At a time when New York is matching the federal exemption level of $5 million indexed in the future, and we are still stuck at $675,000, that's a problem. Just this morning I was talking to an attorney who said that in the last week he had 2 couples of modest means come forward and ask him about the estate and transfer inheritance tax. What could they do to mitigate the impact of that tax? They're coming in as clients in order to seek his advice on how to structure their affairs going forward.
We just want to, I guess, wrap up on a few more things in the tax area that are impacting New Jersey. We talked about the estate and inheritance tax exemption bill. As I said, there are over a dozen bills there. We really want to focus on a bill that has a great opportunity of getting through. Other things that we continue to be concerned about are, the millionaire's tax. We've been able to put that on hold or abate that. But in the survey, 66% of New Jersey CPAs respondents opposed raising the marginal tax rate on incomes over $1 million. They felt that a tax increase would prompt wealthy residents and businesses to leave the state. Although 34% were in favor because they felt the state's wealthiest could afford an increase. I think the big issue here is that individuals that fit into this, quote, millionaires bucket, the vast majority of them have small businesses, and to surcharge them and for them to leave and possibly take those small businesses could further impact the unemployment rate here in New Jersey. Also, we asked about would you support a gasoline tax increase, and believe 56% of our respondents in the survey were in favor of doing that. I think because they recognize the importance of the infrastructure to New Jersey's economy. So 44% weren't. Other things that are being dealt with, there's a new task force that's been formed by the administration to look at New Jersey's pension reform. And so we hope to play a role in that by taking a look at the report, dissecting it, getting people who have expertise in this area to really vet the recommendations that are coming forth on this. I think one of the things, since we are talking about the 2015 tax season, I had an opportunity to reach out to the director of the Division of Taxation, Michael Bryan, and he asked that we bring forth a couple of points that the division is really pushing. And that's they're encouraging e-filing. I think they've sent out close to 4,000 letters to practitioners indicating that they should be e-filing. There's a policy out there for that. Potentially be fined, and so they're trying to slice down the number of paper returns. Right now, still over 1 million paper returns are coming into the state, and so be prepared to move forward with this regime. Don't be surprised if you get a follow-up letter if you're not adhering to the e-filing mandate.
What's interesting about that, a couple of years ago in New Jersey, if you had a person with little to no income and earned income credit, it wasn't allowing you to file electronically. So there's a situation where it is impacting even the lower level of income, and they really need to fix some of those nuances with their systems.
So, and just a few other items that the division's working on. And this is some dialogue that's been taking place on the open forum about e-filing returns and NJK1s. And I guess there have been some software providers have rejected these returns and whatnot. So again, stay tuned. Make sure you check our website to get updates on this. And we continue to have a great relationship with the Division of Taxation, working with our practitioners.
Ralph, you bring up the open forum, and we're finding our members find that as a great source of networking with each other. If you haven't had the opportunity to log into the open forum, I highly encourage you to do it and see the questions that are being posed. If you can help answer the questions, feel free to do so. And if you have questions yourself, it's a great way, especially if you have a small practice and you don't have a partner to bounce things off of. The open forum is really a great, valuable tool, and encourage you to take the opportunity to use it.
Right, and I think last filing season we got a lot of calls from members about the concerns over fraud on state returns, and where additional information was being asked for. This it appears that the models that the state has been using have been refined, and therefore hopefully fewer returns will be interrupted this year, primarily in the earned income tax credit area. I think so. Hopefully that will come to pass, and we won't have situations where returns are being held up for a long time. And just one more item: the division is working toward a global systems modernization that hopefully could redefine how practitioners and taxpayers engage with the division. So I think that hopefully will be an improvement that will bode well for our members.
I was just going to give it another plug for the open forum, because there's a lot of good questions submitted, a lot of good dialogue back and forth, and I appreciate our members that give their time answering. A lot of specialists go on there and give their thoughts, so it's not just speculation as to answers when they're coming out. There are people that are really knowledgeable in the area too that are replying. So I encourage our members to use it.
Good
And
point.
again, I think we'll have information regarding the whole e-filing process that we can provide to members that will be available for them to process, because I'm sure people are saying, well, what if my client doesn't want to e-file? Well, there's a special form that you have to fill out.
Right,
So we'll
there is.
provide all that information.
We'll post that, yeah.
Post it on there.
Yeah. Okay, let's move on to the hot topics section of our agenda today. And Brad, you've been a little quiet, so
Brad, quiet?
when our first topic, we always want to know what's going on in the State Board of Accountancy.
Okay.
And I know you religiously attend their monthly meetings, so what's
Sure.
been happening since our last
Sure.
Issues Watch?
Quiet because Ridge comes over, puts tape over my mouth, and binds me over here. There's a couple items that they're focusing on or have gone through. The amendments to the CPE requirements regarding didactic instruction. If you attend certain CPE, you should be aware of what's considered didactic, which really is more concerning is the other way, is what's not, which is considered self-study with the limitation on self-study credits. Just be aware what is and what is not didactic. Tapes, videotapes, stuff like that, a whole series of the presentation is not considered didactic, but if you have a live presentation that includes some videotape presentation, it could be considered live, didactic. The other area is there are amendments to the educational experience requirements that the state is considering, the state board is considering. Their comment letters on this were due today. We had, the State Society had our educators, our educators committee, or people involved in the education industry, provide some comments on this. The goal of this whole thing, of this whole process, is to make sure that New Jersey is in conformity with what they like to refer to as the UAA, the Uniform Accountancy Act. We don't want to be out of sync with all the other states. Right. We want to ensure that for practitioners, they have the mobility. If they need to, they don't want to have to deal with reciprocity issues if they need that down the road. So they want to make sure we are in sync with the other states.
Brad, on the deadline date, it has been extended to January 4th.
Oh,
yeah. So
okay.
Just want our viewers and listeners to know about that in case they want to make a comment.
Absolutely. Spend your holiday season sending in a comment letter. That's what I plan on doing. And on the AICPA level, the CGMA, the grandfather period ends December 31st. After that, you're going to be required to, starting January 2015, you're going to be required to take a case study examination. So if you have the criteria, the credentials to be qualified as a CGMA, I strongly encourage that you sign up before December 31st. Continuing on, we have a video clip addressing the CPE triennial. It ends December 31st of this year, and we'll talk about the extension on that one. You're not going to catch me on that one. So are we going to the video now? Great.
What if I don't have enough credits by December 31st? Request paid and active status. Pay the associated fees. Take the required number of credits. Reapply for active status. For answers to more renewal questions, visit the link here or pick up the phone and give us a call.
And again, if you're missing credits, first thing is if you're a practitioner and you're missing credits, get the credits. I don't know how else to say it. Today's the 19th, so you have 12 days left. So it's 12 days of credits. The society gave to me. It's a holiday season. Let's be festive. Get the credits, especially if you're a practicing person. If you are not, consider transferring or making your license inactive. If you feel you need to be an active person after the deadline, pay the required fees, get the required CPE afterwards, and then refile. But don't, again, if you are practicing a CPA, don't try and bounce back and forth and ride without a license.
Brad, before you brought up, is there an extension? And certainly we have gotten a question. Will there be a 30-day grace period at the end of the triennial to obtain the required 120 hours?
No.
Very good.
I tried to say it quick. I was going to cut you off and just say don't ask a question. No, there is no grace period. We've known about things like that in the past. The state board, you said before, we attend the state board meetings and we hear their comments, and they do like to listen to the practitioner and understand if somebody does have issues, physical issues, sickness. They are sympathetic to that, but somebody that just is busy doing their holiday shopping, they're just not going to accept that.
Yeah, and if the licensees do have issues, they should reach out to the board now and make that known before the end of the triennial period.
Be
proactive. Proactive in that regard.
The acting executive director is very helpful. He really wants to work with the licensees, the New Jersey Society. I give him a lot of credit for what he's the changes he's trying to make.
Yeah, and again, I have to put up, if you've got to have a New Jersey law and ethics course. So if you haven't taken that, there are a couple of opportunities that are still left with a couple webcasts that we have, and actually some live in-person sessions. I believe there's one on December 29th. There won't be one on New Year's Eve, though. There will not be a session on that.
Keep in mind, though, this all goes in line with your license renewal, too.
Yeah, absolutely.
We haven't mentioned the license renewal, and the other day I was at somebody's office, and we were talking about licenses, and all the licensees updated their license. They forgot and lost the license renewal form for the CPE sponsor, and it just slipped through the cracks. Now, fortunately, there's still time, but if we hadn't been talking about it, it would have probably slipped through the cracks. So make sure you review all the licenses that you have in place and that they are renewed before year end.
Thanks, Brad. That's a good point. The next question that we got deals with revenue recognition, and being you are our A&A guru, I'm going to punt it your way. It says, I've read that FASB is considering deferring the effective date of the new revenue recognition standards. Can you provide an update?
I appreciate the accolade you bestowed upon me, but the real gurus are the New Jersey Society A&A Resource Group. I went to their meeting just the other day. Peggy Gallagher is the chair of it. They do a great job there. And they were just talking about the FASB meeting this week. They really had very little talk on it, but the rumors are that they are going to be extending it.
Okay, thanks. I think we have time for one more question. Actually, we don't. I guess we're out of time. So the other question we have, we can post the response on our post meeting. So that's it for today's issue. I want to thank both Ralph and Brad for joining me today. And on behalf of your society's volunteer leadership and your society's staff, I wish you a very happy, healthy, and joyous holiday season.